welcome everyone to our first panel on the Luxembourg booth. We're starting things right off with a hot topic at the moment, institutional digital asset custody. With me, I have Thilo Derenbach, who's the Digital Security Services Lead at Clearstream. Welcome. And I also have Julian Sawyer with us, who's the CEO of Zodiac Custody. I'm Giulia Pescatore. I'm a senior manager at Deloitte, and I'll be the moderator for this 25 minutes panel discussion that we'll have here. Alrighty, so first question. I think quite a few of you, or quite a few of the audience might be familiar with what you do, but maybe not everyone. So could you please give us the 60-second version of what the company does with regards to digital assets custody?
I'll go first then. Julian Sawyer, CEO of Zodiac Custody. We're a digital asset custodian, started by Standard Chartered and have a number of other shareholders, so owned by the banks. We do two things. One is third-party custodian services for digital assets, and secondly, we do software as a service, providing the technology to financial institutions.
Hi, Thilo Derenbach is my name, working for Clearstream Banking, which is the post-trade arm of Deutsche Börse Group, the exchange organization. In the post-trade space of that organization, we deal primarily with securities, real-world securities, RWA, but we're looking very much to not only issue, process, lifecycle event manage, and keep in custody real-world assets, but also offer tokenization possibilities to issue them on-chain, process them on-chain, and combine those issuances also with the cash rails, meaning that we also service clients with what we call D7 DLT from a securities perspective, but also cover payment rails, including stablecoins, wholesale CBDC, and cryptocurrencies.
Thank you, guys. I hope this clarifies a little bit what our expertise also around the table here is. I'm confident we have the right people to, especially, for example, answer the first question, which is around MiCA. MiCA has been now in effect for a little while. Is there any tangible change that you've seen with regards to institutional investors that are seeking to hold or trade digital assets?
I'll kick off and then we'll keep handing the microphone. I think MiCA is a very important piece of regulation that has come into force. It's a European-wide regulation, as most of you know. Before that, we had very comprehensive, solid domestic regulations in Germany, Switzerland, Luxembourg, of course, Liechtenstein with the Blockchain Act, particularly in Luxembourg. They made quite a splash and also attracted a lot of participants and institutions to come to the market, to the domestic market, and position themselves there. But we need international or at least European harmonized regulation to move forward. MiCA is a very, very good way forward. And that now finally and initially allows institutions to really play in the space. Before that, it was rather domestic or retail play. MiCA was early out of the block. We had a good positioning as Europeans for some time. The Americans have caught up with Genius and other acts that really had allowed market participants to accelerate. And as we can see now, all the major banks are now either deeply or at least dipping their toes into crypto, digital, stable coins, all these topics, and have caught up, surpassed us in Europe. But I think with the regulation that we have in place, we have got a good basis. And institutions are very, very much for the last 6-9 months really picking up the topic and looking to invest into that space.
I guess building on that, I think what institutions want is clarity, and MiCA provides that. What we are looking for is the roadmap of regulation so that clients can invest and make the decisions. You know, Singapore has been a leader in digital assets over many, many years. You know, this is Europe's time to do that, and particularly in Luxembourg. But it is providing that clarity. It's also about alignment between various jurisdictions, which helps between organizations investing and trading within the EU, and then trading within Singapore or in Abu Dhabi, etc. So that alignment, not equality, but that alignment is critical for institutions to enter into this market.
Sounds good. And Thilo, you mentioned it also earlier, but you've actually gone live with your crypto custody service not too long ago. I think we've also seen some news recently on D7 DLT, which is also very interesting. But specifically on the crypto custody service, Any early feedback so far? What have been the reactions so far?
So obviously they've been good, but to be honest, we have to differentiate on the institutional side between those who, as I said, want to dip their toe into the world and those who are going wholesale into it and want to deploy their own services and products in depth. And what we offer from a crypto custody solution is allowed for traditional players who are starting to understand the environment to recycle and reuse their traditional rails, meaning they can reuse their account structure, they can communicate with Swift messages with us, they can work with ISIN codes that they're very familiar with. They don't need a wallet concept, they don't need to understand the technical rails underneath. They can just continue doing what they've been doing for decades, using infrastructure that is entirely tried and tested and well integrated into their core banking environment, and just hold Bitcoin, Ethereum, a stable coin in their normal environment. And so the contribution that we make is that we say we have traditional players, but we allow them to interoperate with the DeFi world in a way, using cryptocurrencies or stable coins. But in the traditional world, combining those crypto assets with the traditional assets in one collateral pool, and then reusing all of that, the increased size of that pool, to cover exposures off-chain, but also on-chain.
I thought Julian wanted to add, but
It's great.
so very good early feedback as well from people around the table. Excellent. So Julian, on your side, actually, you've gone for a partnership with XBTO for institutional Bitcoin yield. What were the client expectations in Europe, and how's that been going?
I think if you take a step back from that particular example, what you're looking at is how do clients who are holding Bitcoin or any other crypto create a yield from that? And I think having Bitcoin yield is absolutely critical. And I think this is really showing the evolution of and the maturity of our industry and what we're doing, but also what institutional investors are looking at. So holding assets is not enough now. It is what is the earn capability, whether that is staking, whether that's yield, whether that's actual management, lending, borrowing, etc. But being able to create that is critically important to the ecosystem.
Sounds good. Now, we've talked about crypto assets, right? So that's the way also that they're defined in MiCA. But there's also the other side of the coin, which is tokenized financial instruments. So if we're looking at tokenization, which has been increasing steadily over the years, especially in Europe, where do you see adoption going at the moment? And do you see adoption rather in funds, in bonds, or private markets, for example? What kind of, let's say, instrument do you see has more potential at the moment?
So being slightly controversial here, a lot of people are talking about tokenization. Very few real use cases that are more than proof of concepts, which are really, really important. But I think people are talking about it because it's the buzzword, not because they understand what the real need is, why it is better than the underlying security or asset that is there. And I think what we're going to have is a shakedown, if you like, of the conversations to how are we doing things better for our customers. So is it faster, is it cheaper, is it more liquidity, etc. And until you can answer those questions about what the real demand is, we can't really talk about where this is going to happen in terms of what asset class is going to be tokenized. You know, there's a lot of noise at the moment about tokenized money market funds. Wonderful, that is great. Is that a proof of concept, or is that actually to do something fundamentally different that the underlying money market fund is not doing? And I think probably the jury is out on some of those things at the moment. So for me, I think it's always, to use a very English expression, a bit of pinch of salt. You've really got to look through what is being talked about and the hype and really get under the covers to go, is this of substance? Is this helping customers? Is it helping the market? Is it helping liquidity? And I think once we understand that, it'll be very clear what are the right answers. So slightly different answer to the question, but I think that's an important one.
I'd echo that and perhaps add also the question of what we're trying to solve, what sort of problem we're trying to solve with these tokens, because in the end, they're just electronically issued and processed securities, the RWA. And it's easier to answer that question from an issuer's perspective than it is from an investor's perspective. For the issuer, it's quite clear. I have a smart digital object. I can issue it quicker. I can distribute it quicker. I can modify it quicker. I can reach my investor base 24/7, 365. That's great. I can create funding for me as a corporate very, very quickly. But as an investor, I still just hold an asset that's worth 100 million euros or dollars. And that also is fine. But to your point, it's important to take that next step. Tokenization, I think tokenizing we can all do now. Now it's a question, how can we actually mobilize and reuse the assets also in the blockchain environment? And that from an institutional perspective has not materialized at institutional grade yet in that extent. On the retail side, that will be very, very different. So we need opportunities and possibilities to use them as collateral, lend them out, repo them out, just refinance that asset because I've blocked capital, I've put balance sheet up against it. Now what, right? I'll stop there. I think that's a very important next step on the security side. And then we have to, we may not forget that we need the cash side as well, ideally on the blockchain, whether that's wholesale CBDC for central bank money solutions or stable coins for commercial bank money solutions. That doesn't matter. Both are eligible, both are legitimate, and both have their use cases. But combining those things to perform true DVP transactions on chain, again, 24/7, 365, is still not there, but that's the goal, I think.
Julian, I see you like moving your head and saying, yes, indeed. How do you see the cash side, basically, from your perspective?
So I think when you look at cash, I think you've now got a spectrum of options between, fiat, stable coins with yield, all the way through tokenized money market funds. And actually, if you have got the right infrastructure in place, and Mika helps, then it all becomes one and the same, and therefore you can talk about which one works, what asset works best for you in the type of transaction trade that you're looking at. The thing which I think is critically important here is then trust, because these underlying assets, whether they're a stable coin or whether they're a tokenized money market fund, is who is the underlying issuer, what substance is behind there, and what trust. And therefore, I think you're going to see more banks coming into this space. Central banks clearly have a role to play, but we've got to make sure that element of trust is there as well.
Makes sense. Now, if we move a little bit now to the Luxembourg topic, both of you have operations in Luxembourg, or at least the companies do. So Luxembourg is often quoted as a real European digital asset hub. What makes it actually an attractive location for you?
Sorry, can you repeat the question?
What makes it an attractive location? And basically, why is it attractive for building and scaling, especially custody businesses?
I think for us, and why we decided to move our European operation into Luxembourg, was really two parts. One is the appetite for digital assets, so the bits that we've already spoken about already today. But secondly, the traditional financial services hub that Luxembourg has been for many, many years. And so where we see the opportunity is helping traditional finance embrace digital assets, and digital asset firms embracing some of the controls and opportunities that you have in TradFi. And then you've got the geographical position as well of Luxembourg. So for us, it became a relatively straightforward base for us to come into Europe, to land in Luxembourg.
We come from the other side. We've been in Luxembourg for many, many decades as a traditional player in the post-trade space. So for us, it was natural to be there and stay there. But we've always had a very, very good relationship with the regulator, with the central bank, with the government, of course, because they are very supportive of the financial industry. That's why Luxembourg is what it is today, because of the services that have been established there around funds, but also other asset classes. And you find all three parties that I've mentioned encouragingly supportive of business opportunities in this space. Always have been. And we spoke about the Blockchain Act. Luxembourg was probably really genuinely the first out of the block with comprehensive regulation for the domestic market. MiCA now supports that and allows for people who want to be in Luxembourg to operate at a European level, which is also fantastic. And with the CSSF, that has a solid understanding, very solid understanding of these things, and being supportive of the developments in the financial industry, I think it's a very good place to be. And there are a number of companies that have positioned themselves there. You're there, HSBC is there, New CSDs, digital CSDs are positioning themselves in Luxembourg. It's a really, really good hub geographically, but I think from an support perspective of the relevant regulatory bodies, but also from a counterparty perspective, because many parties are there already now and are attracting more.
Absolutely. And it's kind of like a virtuous circle, right? Because I think we've also seen Coinbase coming to Luxembourg. We've seen Standard Chartered. I think those are companies that people are very familiar with. And I think for the Singaporeans, DTC Pay. So quite a few actors are actually choosing Luxembourg because of the reasons that you mentioned as well. Excellent. So we're coming to the end. So let's have a little ending on the lighter note. So let's say we're going to meet again next year, right here on this booth, maybe on these chairs. What would be the headline that you would like to see next year with regards to digital asset custody?
I'll start off being a traditional player. The interoperability between TradFi and DeFi generally will be a theme next year. And not only a theme, but we will see lots of progress along that dimension. The integration of cash and securities, and I'll stay in the security space when I talk about assets, on-chain will be a big theme, and we will see a lot of progress before the end of next year. I think Europe has a potential to position itself better, more strongly in that space. And so my headline would be full interoperability, TradFi, DeFi across cash and securities.
I think I'd answer this in two parts. One is that we've got our MiCA license from the CSSF, which would be a major thing for us. And then I think also from a market perspective, obviously the adoption of crypto is an ongoing journey. But I think when we look at tokenization and we look at stable coins, it would be great. And I think 12 months is a little too optimistic on my mind, but it'd be great if we stopped talking about them. We just talk about what we're trying to do to solve customers' problems and using technology in the best possible way, which happens to be stable coins or happens to be tokenization. And so we move this conversation from being the edge of financial services conversation to absolutely in the core of it, because it is just one and the same thing.
Exciting things. We'll see if those wishes come true next year. Fingers crossed. So thank you both. Thank you, Julian. Thank you, Thilo. Thank you for joining this panel and sharing your insights. And I think we're going to the next one. We have a next one coming up in 5 minutes, I think. 10. Thank you, everyone.